Success is achieved and maintained by those who try and keep trying. W. Clement Stone. And Mr. Stone again reiterates what we talk about over and over and over again. It's the way we start every show, is about how important it is to try and keep trying. Success in the marketplace, this knowledge goes to those who practice day in and day out, learning the intricacies of what it is we are trying to do, and that is trend follow. It is not rocket science, it's charting art. It is many times more art than science, so you've got to learn the nuances of what it is we are doing here. And the only way you're going to learn is by doing. I can teach you only so much. You've got to do it yourself. You've got to practice trade. You've got to fill out at least your weekly market worksheets, if not your daily market worksheets. If you want to supercharge your training, that's how you do it. And again, lots of great training. Have a great training for you today. It is part 1 of 2, trend line basics. And what do we see our trend lines doing now as we jump into the S&P 500? Stocks down for the day, bonds and gold up. We see price movements well above that weekly trend line, above the 2-day trend line. Also, derivative oscillator still negative on the weekly chart for the S&P 500. Price percent oscillator pulling away from the red signal line. So it is a good up week with a big candle, as big as we've seen over the last many weeks. It looks like it's as big as the candle back on the 17th, ending the week of the 17th of January, maybe a little bigger. So again, we'll continue to keep our eye on things as the week wraps up on Friday. And of course, at the close of the market on Friday, we'll prepare for you the comprehensive review and forecast. But we look at the latest 2-day candle, high 138.12, the prior high 137.02. So again, that's nice to see. And again, a nice big green up candle, stair steps moving up. Did end the day with a 2-day vertical crossover, what we call a recross. How many of you practice traded that at the end of the day? And if you didn't, why didn't you? Were you looking at the 4-hour chart? Well, it actually had some pullback in the morning, but the average pace on our Heikin-Ashi candlesticks moving higher in the afternoon. Price percent oscillator is flat, and the derivative oscillator still positive, but barely. And again, if you do make the trade, write your reasons down for it. Write your concerns about when you entered it, what you were concerned about. That's what your trade worksheet is all about. Those are for free. Look in your show notes. If you're not a subscriber, go to chartingwealth.com, subscribe. Every day you'll get an email with links to things like your daily market worksheet, weekly market worksheet, trade worksheets. Fill those out, use them. We have instructions on how to use them. And again, they're worth their weight in gold. So that's where we are with the S&P 500. Now let's go back to the weekly. Go to the Nasdaq 100 down for the day. S&P down 0.11%. Qs, the Nasdaq 100 down 0.13%, but a nice big green candle forming, and got one more day on that candle, but a nice big green up candle. Prices are well above the weekly, and it is also above the, we're going to redraw this weekly. Of course, it's still going to be above it. We're going to draw it a little closer in time, which is important. You want to, again, as we talk about over and over, you want to try to connect 3 candles. The more you can connect, the better. We've got 1, 2, 3, 4, 5 candles connected there. That makes for a nice trend line. We see the price percent oscillator spiking up. Derivative oscillator continuing to lose momentum. Price above the weekly and the 2-day. We go to the 2-day chart, and of course, remember that 2-day recross on Friday. Weekend effect drove it up, driven even higher on the last 2-day candle. Your jumping in point somewhere around the last at 229 something. And again, we're calling this on the Heikin-Ashi, which is hard to do, but somewhere around 229, high 234 in 4 days. Is that okay for you? Is that all right? Yeah, that's all right. And again, that's off of a 2-day recross. Price percent oscillator heading up, derivative oscillator heading up. So again, Been quite nice on that practice trade. Hope you did it. We look at the 4-hour chart. It is getting weak. And again, if you see that 4-hour chart roll over and start going down, you can take your profits at that point. You can take your profits anytime you want. But again, things are looking decent, even though it was down a little bit for the day, 0.13%. Continue to monitor. Keep your daily market worksheet. Keep your trade worksheet. Pay attention to what's going on. Learn from every practice trade. Again, worth their weight in gold. Now, we're going to leave stocks, go to bonds. Bonds up for the day, 0.38%. Remember, I had that weekly vertical crossover back on the week ending the last day of January, the 31st, 2 Fridays ago. And the following week, we had a red open box candle, which again means a slowing down in up movement. This week it was red, but after today, after Thursday, switched over to green. Now, not reaching a higher high than the prior week. Derivative oscillator is gaining momentum. Price percent oscillator is heading up and not as strong as it had been, but again, still heading up. That's good to see. Up 0.38%. We're waiting to see if indeed we are going to get a jumping in point for an up trade in 20-year bonds. Now we see that the 2-day chart has drawn a red down candle. Price percent oscillator still positive. Derivative oscillator losing momentum, sitting right there at the weekly trend line, has penetrated the 2-day trend line. Did that a while back with sort of a sideways slip. We look at that 4-hour chart. We keep talking about when is there going to be enough energy. It didn't happen back on the 10th. It hasn't happened yet, even with some up moves. Again, 0.38% for the day. Still don't have a crossover going up, so we don't have a jumping in point yet on our possibility for jumping into a 2-day, jumping into an up trade on TLT, 20-year bonds. So we'll just continue to watch. Keep your eyes peeled for that 4-hour chart crossing over, going up. If indeed it happens, your 2-day and your weekly are primed for that event. Don't know if it will happen. If it does, practice trade it. Lastly, we go to gold. Gold up 0.57% for the day. Have a green spinning top for the week. Price on gold is right there above the weekly trend line. Look at the price percent oscillator, just dead flat. Derivative oscillator losing momentum since it peaked back on the week ending the 31st, the last day of January. Go to the 2-day chart. We see again the 2-day chart is another green spinning top. The price percent oscillator is negative. That's why we have that 2-day crossover going down. Derivative oscillator continuing to gain downward momentum. So, of course, that technically takes us out of the gold trade. 4-hour chart up in the morning, a little pullback in the afternoon. So, again, maybe there'll be enough at some point to pull the 2-day chart back going in the same direction as the 4-hour and the weekly. We'll just have to wait and see. So that's where we are, folks, as we end the day on Thursday. Sorry this is coming to you a little late today. I have been traveling. It's the quickest I could get it out to you. We love to hear from you. CW@chartingwealth.com. If you hadn't ordered our book, Charting Your Way to Wealth, I have an autographed copy ready for you. And again, thank you to all the Patreon supporters. Lots of great stuff for our Patreon members. We have all sorts of great training, short chart training, long chart, quarterly chart training, and of course our Bitcoin training and all sorts of other special stuff. God bless. All the best from the whole team at Charting Wealth World Headquarters.